First of many.
All right. Good afternoon, folks. Ryan Gonzales here with Becker Properties. I'm joined with Carlos Cruz from CMG Mortgage. We just wanted to get on this set, man. This set's awesome. For about 30 minutes, not too long, and talk a little bit about the market, inventory right now, interest rates, why it's so tough to buy right now, and what are some potential solutions to buy when you're in a conventional FHA or VA situation. Um, Carlos has been doing it for about 8 years, so he's very, very experienced. Does a ton of loans, and he's going to give us a good idea of what he's seeing on the lender side, and I'm going to give y'all a good idea of what I'm seeing on the buying side, and also from a seller's perspective too. So if you've talked to anybody right now, you know that it's pretty tough out there to buy, and some people are wondering why. You don't know what you don't know, so we're here to just kind of talk a little bit about that. Carlos, what is some stuff you've been seeing on the lending side from compared to this year compared to last year?
I think doing loans in Texas, the biggest thing that we've seen is the number of buyers coming from out of state. I know it's created a lot of stress on Texans in buying and being able to compete. I think what we've done as an industry to help our Texans be able to buy is create some solutions, whether it's assisting them in buying down their rate to be a little more competitive in pricing. I think another big tool that we've been using lately is the ability to do a TBD approval, where we're going to actually underwrite that buyer completely, take a look at all their assets, their income, all of their credits, any liabilities, calculate their viability on moving forward, and then issue a strong approval. This way, their offer is competing as if it's cash. They're closing in 2 weeks. All they need is a clean title and a clean appraisal.
So you can close in 2 weeks.
Yes.
That's awesome. What about these appraisals? These appraisals are taking forever.
Well, there's some tricks on that one. Obviously, if we disclose that loan quickly and we execute on that appraisal order quickly, as a lender, we're ordering those appraisals on a rush. This way, I'm getting to the front of the line and outrunning some of my less committed competitors.
That's awesome. That's really cool. I don't know how many lenders do that. I've heard of that, like pre-underwriting.
It's a wonderful tool.
Yeah, that's awesome. That could really help you in an offer situation where people need to hurry up and get out of their house. It's sitting vacant, and maybe it's been sitting vacant for months. Maybe an estate sale where they want to just sell it as soon as possible. So that's definitely going to be a good tool. Something else I want to talk about. Right now, there's a big struggle with inventory across the nation. In San Antonio alone, we have about 5 to 6 months of inventory. And just 6 months ago in December, we had 2 months of inventory. About a year prior to that, we had about 3 to 3.5 months of inventory. And what that means, for y'all to understand that, is that if
You said five. How much do we have right now?
about 5 weeks.
5 weeks of inventory.
Yeah.
Oh God.
Yeah.
I thought it was a little better than that. Okay. Sorry.
So what that means, if it means that if no other houses were listed, we just stopped listing houses completely. In the next 5 weeks, we would be completely out of houses on the market. So you can imagine with all the buyers, what that's doing when the house gets listed, and how that's affecting buyers and how it's affecting offers. Sellers, it's not uncommon for sellers to see anywhere from 10 to 20 offers right now. And it used to be, a couple months, or not months, but years ago, it used to be more like maybe 3 to 5 offers. You had 6 or 7 offers, you're like, damn, that's a lot. But me being in the industry so long and working with different agents in my office, I've seen houses have 30 to 40 offers, which is insane.
I just made an offer on a home. I had 15 minutes to look at that house. I don't even know what the house looks like anymore. I offered 8% over the asking price.
Mm-hmm.
I gave away free lease back. I am paying title. And the only reason I knew that I would be competitive is I basically gave them everything that they could have wanted. We were fortunate. We won the offer. But it does create stress on what's going to happen until that appraisal comes back. We were blessed. It met value. It's not that same process for other buyers, which means now they're having to come to the table with the difference of cash on top of their down payment.
That brings me to, my next topic is, what are you seeing with appraisals right now? How often are they meeting value, and how often are they not meeting value compared to last year?
I would say the stress on appraisers to be able to find comps that are in line with price changes is not, and I don't use this word lightly, it's really not fair on them, because the market hasn't even caught up to the current pricing today. And it's not that the value's not there, it's that the numbers haven't closed yet. So there's
true.
nothing for them to refer to.
That's true.
When buyers are willing to pay above asking to win a deal, that is the market. And it is creating a stress on an industry of appraisers that we're asking them to execute a prompt turn time. They're having to do an exorbitant amount of work to get to that number. It is not a realistic expectation to expect that turn time to improve anytime soon, because we just don't see a lot of people entering the appraisal industry. It's tough.
Yeah, that's tough. That's super tough. And that's why, appraisals may take longer than usual, and you're having to rush them. And even at rushing them, they might still take, a week or so?
I just made a exorbitant rush. I offered twice the price for the appraisal, and I'm still being told it's 3 weeks out.
Seriously, dude? That's
Yes.
crazy. That's insane. So, just to give you an idea of how prices and inventory has been affected in the last year, the San Antonio Board of Realtors sends out a monthly statistic sheet that shows new listings, active listings, pending listings, the average price in that month, median price, and the total amount of sales. So sales is up by 27%, which is obviously bringing down the inventory. Sales price, the average is for the last month about $330, and then median price is $277, and that's an increase of 15%. I mean, these numbers are crazy from one year to the next, and so this is definitely tough for appraisers to see the value when houses haven't closed yet and justify that price. And so some appraisals are not being met, which means buyers are having to typically pay over what the house is worth, quote unquote. But you're right. Buyers determine the market. They determine the value of the home, because if you have 18 offers, and
that is the market.
Yeah, and 10 of them are like around, the same price, but yet it doesn't appraise. It's like, it's crazy. It's really crazy. The best thing listing agents can do for the seller in that instance, if there's that many offers, they can basically show the appraiser, hey, I had all these offers for the same similar amount. We chose this one, but you could see that the buyers are willing to pay this amount. So that should help justify that sales price. And, that helps out the buyer too, if, so they don't have to pay over what it appraises for. If it doesn't appraise, well, that's tough.
There's another stress point that some people aren't really talking about. If a house has a price of X and that sales price that gets accepted is 10, 20, 30, 40,000, whatever percent over, there's another stress point that's coming back on the lender. And if that lender is selling back to Freddie or Fannie, they may choose not to buy that loan because they might see inherent risk.
Wow.
So there are a lot of rippling effects that are happening across the industry.
Definitely. I wanted to talk a little bit about the difference between FHA, VA, and conventional buyers, and why we're seeing more sellers choose conventional buyer offers rather than FHA and VA. And then I also want to talk about what are some pointers that we can give FHA and VA buyers to possibly have a chance in this market. So touch on the difference of those type of loans.
So on an FHA loan, there's going to be an upfront charge for mortgage insurance. There's going to be a fixed mortgage insurance charge pretty much over the life of the loan. On a VA loan, if that buyer is not 10% or more disabled, they're going to have a VA funding fee. Most of those types of buyers will finance that amount. So their loan is always going to be a little bit bigger than had they gone conventional. A conventional buyer is going to be a little more competitive for themselves because the interest rates that we're seeing for conventional buyers 3, 4, 5 years ago, it used to be significantly higher. 50 basis points. It might have been, instead of getting a 3.5, they were getting a 4 or 4.25. Today's market, that same score buyer, VA versus conventional, the difference in rate might only be about 1/8 of a point. So now, more people that can go conventional are going, and the perception, I think, amongst sellers is, well, that's a better deal because my seller is no longer on the hook for any unallowables or any required repairs, or God forbid if it doesn't make value. Now, earlier when we were speaking, you had said that you've created a solution for overcoming some of that value shortage fear that a seller might have. What did you just do?
So with VA and FHA offers on the third-party financing addendum, you have to put an amount on the third-party financing addendum saying that this house will appraise for X amount. And so probably 2 years ago, 3 years ago, we could put that the house is going to appraise for the sales price, and a lot of times it would. Even if we're going above asking, it's not uncommon. It was not as uncommon for the appraisal to come back low. Because the appraisals are coming back low and the house is not meeting value because we're having to offer, 8%, 10% over ask price. Sellers see that as a huge risk because now the buyer has an out to walk away if the house doesn't appraise. So a buyer needs to put in special provisions that they're willing to pay over what the appraisal price comes in at if it doesn't meet appraisal, to offset that risk for the seller.
Do you think a lot of buyer agents know that, or is that an unfair statement?
I do think a lot know that, but there's a lot that don't know that.
Okay. Because the last time I looked, there were over 16,000 agents in San Antonio.
Mm-hmm.
Out of those 16,000, 3,200 do 80% of the deals. So I think it's fair to assume that a lot of those agents don't know that solution.
I would say that you're right. And also,
not to besmirch them, it's just some of them aren't coached well.
Yeah, I was just talking to an agent at an open house, and she's like, I can't find a solution to get my offers accepted, yada, yada, yada. I don't see any type of trend or whatnot, and I'm not going to advise my buyer to pay over asking or what it appraises for, and that's kind of what we're seeing right now. So most houses are going, from what I've seen, about 8% over ask price. And some are appraising, yes, but a lot of them are not appraising. And so you're having to state in special provisions if you're an FHA or VA offer that you're willing to pay that gap, that appraisal gap. Or with a conventional loan, you can actually waive the appraisal option. Basically, waive the appraisal termination option. And so you could say, that's basically saying that I'll pay for the house no matter what it appraises at. And if we get an offer like that coming from a seller's point of view, that's the best offer we can get because now we have less risk. They're willing to pay that sales price amount no matter what.
Now, I had to provide proof of funds that I had that extra overage.
Mm-hmm.
Is that something that you're saying or you would think is pretty normal?
Yeah, definitely. I just had a situation where we went 25 over ask price and we waived the appraisal, basically saying we're willing to pay this 25 regardless what it appraises for. Now, I I did my research at the and looked at the comps, and I told my buyers I think it will appraise, but there's a slight chance that it may come in a little low. So you just got to know that moving forward. And they agreed, and we moved forward. But before we moved forward, the sellers and the selling agent did ask for proof of funds to see that we had that extra cash.
Just in case.
Yeah, because we were only putting down 5%. So like, oh, you're only putting down 5%. We want to see the extra funds in the account to make sure that you can definitely pay for that appraisal gap. And the reason being is, I mean, every offer typically comes with third-party financing addendum, and there's an out that says within so many days you can opt out of the contract and get your earnest money back if for some reason financially you don't get the full approval. And so there's still that out. So if you're not checking proof of funds and they're saying they're willing to pay 30, 40 over, and it comes in super short, well, then they have that app to walk away and get their earnest money back. So listing agents and sellers are getting smarter about checking proof of funds because of the current situation we're in right now. So
do you see it getting better anytime soon?
Oh, man. And I don't. I think it's very, very tough with the amount of people that are coming to Texas, moving to Texas, interest rates being so low. Like we were just talking about this earlier. I refinanced my house at a 2.99, and now I'm going to rent it out because I can rent it out and make money on it versus selling it. So now I'm making some passive income, and they're paying my mortgage down, have a ton of equity in the house. Why sell? That's one of the reasons. And then the influx of buyers coming in from all around the nation is just insane right now.
Some of the builders that I've spoken to have shared with me some of their stress points. Paint companies don't have tint to make white trim paint.
Wow.
Window companies aren't able to produce the windows fast enough. The hardware that's needed for doorknobs and door hinges are stuck on boats in a port in another country. I was talking to a buddy of mine. He said that OSB, the companies that make the OSB board, is running out of glue. So I don't think builders are going to be able to catch up. As not to mention,
what about cement? Remember?
Oh, we were talking about cement.
Yeah,
apparently cement's a problem. They're running out of potash to slow down the cement cure time. So
it's insane, man.
Obviously wood.
Yeah.
Oh, yeah. We're not even talking about the cost of lumber.
Lumber's gone through the roof.
Not trying to get political, but there is a lot of pressure on lumber, and those costs. I don't even know what the numbers are, but bottom line is, it's somebody was telling me that a 4x8 sheet of OSB used to be $20. I think it's now $60. I might be off again. I don't know.
Yeah, I got a quote for a fence recently, and it was going to be $3,500 for 165 linear feet. But he said before the lumber went up so high, he probably could have done that for like 2,000 or maybe 2,500. So I mean, just in that little scenario right there, I mean, you're talking about like probably a 30% increase or something like that, and what it costs.
And again, there's the ripple effect, because now you go, oh well, let me use aluminum or steel, and that's not a solution anymore because that's what other people are already thinking of.
Yeah, building costs are crazy, man. And so anybody looking at new construction, I mean, first of all, it's far out. Like, it's really far out.
I'm hearing builders say that they will only sell 1 or 2 deals a month.
Yeah, they're putting a cap on sales reps to only contract a certain amount of houses per month, which is crazy, but they have to do it because they can't catch up. They can't keep up. Man, that's tough. I wanted to give some pointers to these VA and FHA buyers that are in the market right now. So what type of options do they have coming from a lender standpoint on strengthening their offer and also helping them cover closing costs? Because sellers are not paying closing costs right now.
Some of it is just in counseling that borrower, walking through them of what it costs to own a home, looking at the total cost, not just the payment on the loan.
Mm-hmm.
We're talking about the insurance, the taxes, the mortgage insurance, if any. We're talking about the cost of maintenance. We're talking about all of those expenses. And then asking them, does it make sense to pull money from another resource, talk to family, maybe if it's a gift as an option, look at borrowing off a 401k if it makes sense,
Mm-hmm.
and exploring another number of options so that they can have a full picture of what each loan type could do for them. So that I was just talking to an FHA buyer earlier. She thought she had to go FHA. She thought that's all they could qualify for. And in turn, they have the income, it's below a certain number, and they're able to do a home ready loan, which is 3% conventional loan with cheaper mortgage insurance.
Mm-hmm.
So it's actually a better deal than the FHA loan
Lower down
without
payment.
the upfront mortgage insurance. So
Lower cost,
it's a
lower down payment.
win-win-win.
Yeah.
So some people just don't know. And talking to a lender, some lenders will be more open-minded to Govy type loans
Mm-hmm.
because that lender can make more money on the secondary market.
Why do people go FHA? Like, what's so special about FHA?
The early reasoning behind it was that it was meant to give borrowers an opportunity to buy a home with a lower down payment. It had a inherent mortgage insurance risk, which meant it would protect the investor or the lender. And then what it gave the buyer was an opportunity to have a higher debt to income ratio.
Mm.
It allowed them to buy more home.
Mm-hmm.
After '08, when we saw a lot of changes in how a lender could or could not count income, we've got some challenges. So, for example, an FHA buyer in Texas, if they don't want to include their spouse because their spouse maybe has some credit score challenges,
Mm-hmm.
we have to hit that borrower with the spouse's debt,
Count their
and
debts.
yet we don't get to count the spouse's income.
That's crazy, right?
So
Yeah.
there's some logic in there that's broken.
Mm-hmm.
It is what it is, and if we can show that borrower an advantage in conventional, yeah, it might be a little bit different buying power, but at the end of the day, it's still much better than paying rent.
Yep. Yeah, and like I was saying earlier, most sellers are looking at conventional offers as being the offer that they want to choose for a couple of reasons. One is conventional appraisers are a little bit more lenient than FHA and VA appraisals. And we see this from time to time. Like, you'll probably see more conventional appraisals come in at value than you will FHA and VA. Am I wrong?
I can't comment to that because at the end of the day, the analytics behind the process is supposed to be the same. They're simply looking at comps. I think perception in the industry is, yes, your FHA and your VA appraisal will always be lower. I have to believe that's perception and not reality. But if enough people say it, it must be true.
Well, from a real estate agent perspective,
Yeah.
we've seen more appraisal gaps with FHA and VA appraisals than conventional.
So would it be, so I would say on a case by case basis, here's my rebuttal. If an FHA and a VA and a conventional appraisal were ordered at the same time,
That would be interesting.
I'm going to bet you the numbers are pretty much in alignment. Granted, I get there's going to be probably some variance, but I don't think it's as significant as people perceive it to be. I had a woman come to me and she was frustrated because she got an appraisal and it came very low. And 3 months later, when she had come to me, her appraisal was significantly higher. And she felt like the appraiser had either been lazy, been negligent, or been biased. And the irony is that there were different comps that had occurred in that 3-month window that the new appraiser was able to see.
Yeah.
And it raised her value. So again, I can't quote on why one was different than the other than that there was a different set of circumstances in the second appraisal.
Gotcha. I mean, yeah, it would be interesting to see ordering them all at the same time on the same
See
house.
what happens.
Yeah, just see what happens. That would be a kind of a pricey experiment, but I'm curious to know. So that's one reason why, and maybe it is perception, but that's one reason why we typically advise the sellers to look at conventional. But another reason is because typically a conventional buyer is a stronger buyer. So from a seller's perspective, we're looking at a conventional offer over FHA and VAs because it's a little more difficult to get a conventional offer, and we feel like they have less chance of defaulting or not defaulting, but getting that final approval.
Here's where, as a veteran, here's where I would say I disagree. There's a lot of VA buyers that are very strong buyers, and they're using their entitlement they earned. And because of the stigma of VA costs on that loan,
Oh yeah, the non-allowables.
the non-allowable fees,
That's one of the reasons too.
people, listings or sellers believe that, hey, if I choose that loan, I'm gonna lose more money. I'm not gonna make as much. Um, I had a veteran come to me just recently and tell me he preferred a VA loan over a conventional loan because he knows that VA appraisers are going to give him a better, more accurate appraisal. There's a lot of false perceptions on both sides. He was willing to pay a $15,000 funding fee to do a VA loan instead of doing a conventional loan with no funding fee
Wow.
and the exact same interest rate.
Damn.
So there's a lot of perceptions that are rooted very deeply that I think these conversations need to be had. They need to be involved. They need to speak with different people so that they get an educated perspective.
Yeah.
Reading a story off the internet isn't reality. It's talking to the people with the boots on the ground, talking to different lenders. I don't recommend talking to just one. Talk to others. There's value in it.
Yeah.
Talking to an educated realtor is critical. I don't just recommend going to your best friend's buddy's girlfriend.
A friend of the family.
Yeah,
Yeah.
it's a process, and you want the best people on your side at your biggest transaction, most likely of your life.
It's crazy, man. I just had a seller tell me that he wanted to use his sister-in-law, but he knows that she's not as experienced. She has her license. Maybe she sold a couple. It's like, okay, how many houses has she listed? He's like, well, actually none. She's helped a couple buyers buy, and she's helped herself buy. And I was like, oh, okay.
We were all first once.
Yeah.
I get it. And I'm not saying that just because someone's new, they're weak or they're bad. That's not what I'm saying.
No.
I think when you're new, your value isn't your open-mindedness, and it's not just in that. It's there's a lot of commitment, there's a lot of desire, there's a lot of energy that I think somebody's new going to bring to. It's also, but how strong is that team behind them? Your brokerage.
Sure.
Let's talk about that. There's a lot of depth there.
Mm-hmm. Mm-hmm. Yeah, not to say that it's bad going with a friend or family member or somebody that you feel like you can trust because they've had success in other industries. But experience is priceless. Experience is experience, and especially in this market, that weighs a lot. And then also
Absolutely.
there's in our brokerage we always hype up and bring value through our production team that we have as well. So it's a combination of things, and then we can show our numbers and prove our success versus someone who's never done it, doesn't have a track record. So it's kind of like taking a gamble. I just came back from Vegas. I mean, it's like rolling the dice.
Well, it's like floating loans. I constantly get asked, what should I wait or should I lock? Should I wait or should I lock?
Mm-hmm. Oh, sure. Yeah.
If I tell you and I'm wrong, then you blame me. If I tell you and I'm wrong and it benefits you, then so I tell people, I always ask them this when it comes to the question of should I lock or should I float? Are you a gambler? Are you willing to take the risk that if the market goes sideways tomorrow
Yeah.
and rates go up, you accept that that's a consequence you chose?
Mm-hmm.
Most people are not gamblers with their finances, and most people will choose to lock quickly. There are some people that are willing to risk, and And I get it. I'm a little bit of one of those people, but I also have a lot of smarter people behind me that I can ask, what should I do? Should I wait? Should I
Sure.
lock? So it's a complex equation.
Sure. Um, we want to wrap up here in a little bit, but I wanted to lastly give give the people watching an idea of what VA and FHA buyers can do to help them out with closing costs, because I know that there's some grants out there for that, and also when they're putting in offers, how they would have to kind of structure the offer in the seller's favor to get their offer accepted, because we just talked about perception, and there is a perception out there that conventional offers are a better route to go for the reasons that we talked about. And so whether it's true or not, it definitely is out there. So you have to kind of play the game, so to speak.
You got to play the game by the rules in the world that we're in. And at the end of the day, right now the market says sellers prefer conventional deals. It is what it is. No matter how pretty I try to paint that picture, it's still lipstick on a pig. At the end of the day, if you want the strongest offer, a conventional is the way to go.
Yeah, like the deal you did. You put in an offer at 460 something, but you had a 10% down opposed to 5%. So just looking at that offer and looking at a 5 and a 10, it's like, well, I'd rather go with a 10 because he seems like a little bit stronger buyer, and then showing them proof of funds, of course. And so there's conventional gives you I think a better chance right now than FHA and VA. Also, if you can show that you're putting down 10 or 20%, automatically you look like a stronger buyer and a better offer.
Well, the other perception in the industry is, oh, well, he's going conventional because he probably has a much higher credit score, much lower risk.
Yeah. Mm-hmm.
And so that is a very real perception, because at the end of the day, for a loan to be cost effective and go conventional, you're typically looking at buyers with scores above 680.
Mm-hmm.
And so, yes, that perception can be very real. And so, as a seller selling a home that I need to move quickly so that I can buy what I need, am I willing to maybe take a conventional offer over a government loan offer if it's a little bit less? Probably. The same way I'd probably take cash for a little bit less than the conventional offer.
Yeah. I had a deal recently where we have these FHA offers, VA offers above asking, but they still have that contingency in there that it needs to appraise. And I told the sellers, like, hey, we can gamble with these, or we can go with this stronger offer that's guaranteeing us this amount, because they put that in special provisions to guarantee us that amount. So that was just a better, safer offer. And even though it was a little less than the highest offer is not guaranteed if they have that contingency in there that it has to appraise. So it looks pretty, but at the end of the day, it's like, are you willing to take that gamble? And it comes down to the person, either the buyer or seller, at that, either locking rates or in this case, accepting an offer. But
one point I want to make that I think is happening more than it had before. What I'm seeing is buyers coming to me sooner in the process of buying a home than before. I would say last year or even the year prior, I would get somebody that wants to buy a home next week. Now I'm getting borrowers coming to me 3, 6, 9, and 12 months before they're ready.
That's good.
And we're able to counsel them on what the expectations are, not only in credit score, but in paying down debt,
closing costs,
the fees, the costs, the numbers. So that way we don't put them in a situation.
It's the best thing you can do.
Where they're going into a home with no money in the bank.
Mm-hmm.
We want them to have the reserves necessary so that when they move in, they're in a safe place.
Yeah. Yeah, it's definitely the best thing that you can do is go to a lender even, before you're ready. You may be ready sooner, but give yourself enough time to put together a game plan, save, pay down debt. Give yourself the best opportunity. One other thing that I wanted to touch on was the fact that people are looking to wait instead of going ahead and purchasing right now, even though they can, they're looking to wait till the market slows down. And just coming from what I see in the market from this year to last year to the year before, it just doesn't look like it's slowing down anytime soon, even though we typically have a recession within so many years, 10 to 12 years or whatnot. I think even in a slowdown here in Texas, never got as affected as some of the other bigger states, East Coast and West Coast, when the market did slow down in 2007, 2008. So, I mean, I don't think that's such a good thing to do, to wait. And when that happened, rates went up. So rates are not going to be as good as they are now if we do fall into a recession. So it kind of,
It's a catch-22 because, so if I wait a year, how much did I throw away in rent? I mean, the average rent in the city is probably, what, $1,200?
15.
$1,500. So I spent $18,000 in rent. And on a $300,000 house, that house says it's going to probably appreciate 5% in value. So that house next year is probably going to be $315,000.
Yeah.
So to buy that same house a year from now, I just threw away $33,000 in more costs.
Yeah, if you look at the equity potential in buying a house sooner than later, I mean, it's huge. It's exponential.
Money if
Yeah.
you wait.
You sent me that interesting stat earlier. In the last 10 years, houses appraised, like 60%?
That's
insane.
The rate of growth of equity in Texas is probably one of the main reasons people are coming here. When you throw in equity growth, when you throw in a state with no income tax, when you throw in some of the opportunities that we have that other states don't, it's just ripe for coming here. And at the end of the day, yes, it's expensive to buy a home, but it's still a lot less expensive to own the home here than it is pretty much anywhere else.
Mm-hmm. Pays off in the long run, man. Some of my buyers that bought 3-4 years ago are cashing out right now and putting that money towards the other house or the new house, and their payments pretty similar because they had so much equity built up in the first house. So, it's good when it's good when you have a house to sell and you're looking to move up or you outgrow that house, or for some reason you have to relocate. But it's insane right now.
A lot of long-term value.
Definitely. So we're pretty much.
I think we're good for right now.
I mean,
this is what a little over, probably half an hour.
Mm-hmm.
I'm sure people can jump around and take a look and see what they want to hear and give us a call. Ryan, I got to say, working with you and your demeanor has made some of my borrowers a lot calmer. Your ability to explain things clearly has made it easier for them, so that's a huge win.
Mm-hmm.
I would encourage people to call one of us.
Definitely. I'm all about setting expectations. I'm pretty direct, but I think people appreciate that, and I know you're the same way. And so, working with you, I think we're definitely a good team in setting that right expectation, painting that right picture, so we give you the best opportunity, and hopefully get you a house.
And walk away happy.
Yep. All right, guys. Well,
appreciate your time.
Thanks for watching.
Perfect. Money.